Hi, I'm Karen Terry from McGrath and welcome to our September property market review. With the RBA holding the cash rate at 4.1% for the third consecutive month, we have seen a shift towards a more positive sentiment in the property market. Now, that's not to say that the rate rises aren't impacting many mortgage holders, but the positive media commentary about the easing of inflation at faster rate than forecast certainly has been helpful for the property market. The month of August saw an increase in the volume of properties listed for sale across Sydney, with Saturday the 2nd of September being the second busiest auction day of the year, with 933 auctions held, by comparison to the same weekend last year where there were 689 auctions. Values have increased now for 9 consecutive months. As expected, the rise in new listings has seen a deceleration in the growth for the month of August, with values increasing 0.47%. With the strong migration numbers, tight rental markets and low stock levels, the residential property sector has shown remarkable resilience in the increasing interest rate environment. And it's predicted that all of those losses experienced during the recent and sharpest downturn in history will be regained by the end of 2023. An emerging trend that we've noticed in our local market has been homeowners who've been unsure about the market and whether they should sell or not, unsure whether they should buy before they sell, and now starting to make the decision to sell with a much shorter lead time to market. They feel that they've been held up for at least 3 years due to the uncertainty with COVID and the economy. Previously, our downsizer market would plan for months in advance, not necessarily trying to time the market, but more about when it would suit their circumstances, or perhaps when they'd found the right property to buy before they'd sold their family home. We're now seeing an increase in local downsizers who are opting to sell first and are not so averse to renting until they find the right property to buy, as they would prefer to have more certainty about how much they can afford to spend on the next purchase rather than take the risk of buying before they've sold. In a rising market though, it's important not to stay out of the market for too long. We continue to see strong results for homes that are fully renovated with great floor plans, and this is likely to continue until there is a decrease in the cost of renovations. One home that we recently sold had those exact attributes. It was 19 Davidson Avenue, Forestville. It was a unique home in a battle axe position with a single level layout. It had 3 bedrooms, a separate studio, in-ground swimming pool and beautiful gardens, and sat on almost 1,000 square metres of land backing directly onto the national park. The auction guide was $2,750,000. We had 114 groups inspect the home over the 3-week campaign. There were 7 registered bidders at the auction, and the home sold for $3.3 million, which was well above expectations. The home was sold to a family of 5 moving into the area after recently selling in Middle Cove. Our delightful owners are heading to the Southern Highlands for their next exciting chapter. When we value homes in these unique settings backing onto the national park, it's hard to quantify how much of a premium the market may pay for the emotional content of the home, and they're often tightly held for many years. As always, please call our team if you need any real estate advice. You don't need to be selling. We're always happy to provide updated valuations as part of the service we offer to local homeowners. And please call us because we are now finalising our campaigns for 2023.